Okay, good morning, folks, and welcome to Swing Trading today. We have a lot going on this morning. Normally, I do not record on Fridays, but when the markets are in some duress or we're seeing volatility, well, then I want to come online and have a conversation. Um, there's one chart that I'm paying particular attention to, and that's HSBC. HSBC derives, I believe it's 50% of their revenues from Asia, 90% of their profits. So they are very, very concentrated in Asia. They just announced a layoff of roughly 35,000 employees. And one major concern that I had with HSBC, because I did some research, and apparently, and this is according to Forbes, apparently HSBC is the custodian for the gold which backs the GLD. GLD has been targeted by skeptics who question the ETF's secretive methods and even doubt it holds all the gold in HSBC's vault in London. So it's very concerning that we have a bank which is under a dramatic amount of duress and heavily concentrated in Asia for revenues and profits. And they are the custodian of what is backing, I believe it's the second large, it is. GLD has grown to become the second largest exchange traded fund by assets. So we're going to go over a chart of HSBC in a moment. So stick around because we may be looking to short HSBC. And I'll be doing some research over the weekend. I'm probably going to do a separate video on HSBC, the GLD, and to a greater extent, because we are very, very heavily long of the NUGT, to see what our exposure is to HSBC and the fact that they are holding so much gold. Because if they were ever to need to be bailed out, what happens to their assets? The question is, I don't know. I'm not that smart. All I know is I want to have a reduced exposure to them, and with a minimum of having a hedge against them, and that means shorting them directly. So more to come here as I do more analysis. I'm really just getting involved with this over the past couple of trading days. All right, to the headlines as we wait for people to join us, and then we'll go to the pre-market activity. Maersk is the largest container company for shipping around the world. Headline off of Zero Hedge. Weak start to the year. Maersk warns paralyzed Chinese factories to damage global economy. This is the type of validation that I look for when I am entering a trade. I don't want to rely purely on headlines telling me what the government says, because that's all propaganda. I want to see from a vertical perspective what individual companies are saying about their prospects. And we saw Apple come out the other day. They warned on Q1 guidance. Foxconn, who is a component manufacturer they produce a lot of the components for Apple. They warned, and now we have Maersk, which is really a big macro view on what's going on over in Asia, across the board, not just necessarily China, but Japan, Korea. Korea is really becoming a problem now with this virus. And in short, Maersk is warning as factories in China are closed for longer than usual in connection with the Chinese New Year. They knew the Chinese New Year happens every year, or it was at least coming. So their prior expectations would have been rounded out before the Chinese New Year. So they're warning purely on the virus concerns and the prolonged factory shutdowns. As a result of the COVID-19, we expect a weak start of the year, Masrick warned. So this is the supply chain shock. This is more evidence that I've been warning about this for weeks now. The markets have been ignoring it, and shockingly ignoring it. And these are institutions. This is not mom and pop buying 100 shares of the S&P 500. These are institutions who are ignoring the virus and its impact on the supply chain. Next headline. Devastating impact. One bank expects China's PMI to crater as low as 30. So to put this into perspective, the PMI data is measured as such. Here, as a matter of fact, on the chart. 50, which is the baseline at 0. A number, a read above 50 is a sign of expansion in the PMI, Purchasing Managers Index. That means that your purchasing managers, if you have a read above 50, they're confident. They're investing in the business. They're adding on desks and whatnot, equipment to help build out the business. Now, when you have a read below 50, that's a signal of contraction. Now, let's just say worst case, we have a read that's at 40. Forget the 30. Let's just say that this is hyperbole and this is overly estimating the miss that we'll see on China's PMI. If we had come in at a 40 level, I mean, that's devastating for the marketplace. And I think this is from Nomura. I saw their name here earlier. Yeah, right here. Ahead of the official Chinese economic data, which will soon start capturing the period for the coronavirus hit the nation, Nomura's chief China economist Ting Lu noted that China's emerging industries PMI, which gauges momentum in the country's high-tech industries and is closely correlated with manufacturing PMI, slumped to 29.9 in February. That's just incredible. From 50.1 in January, the lowest print on record. It was only introduced in 2014. But still, a 29.9 number, I mean, by God, that's unbelievable. The punchline from Ting: we believe the markets might underestimate the scale of the current slump due to a slower than expected rate of business resumption. We have cut our year-on-year easing measures, which they already have done. That said, the likelihood of and we'll throw this in there as well. All right, so those are two articles I just shared. And again, I'm going to do more research on the GLD, HSBC, and for that matter, NUGT, and its exposure. I want to see what it tracks. Is it the spot price of gold or is it the GLD? That's my concern. All right, let's get to the pre-market activity. All right, this is the NUGT, of which we are very long of, and we are spiking up higher here this morning. We have a last tick at 36.77 on the NUGT. Now, We're becoming more and more extended here, but we do have a price target, short-term price target. I'll post that price target in the forum for members so you can refer back to it. Let's go to the dollar. And I did a deep dive into the charts of the major indexes on a weekly basis last night on Thursday Night Stock Charts Live. I'll release that later on this morning. Members, you have a link in your inbox if you want to go check that out. And thanks for joining last night. We went about an hour and a half last night. It was a really good session. Some really good Q&A. Let's go to gold. Gold is just simply on a tear. We're up 1% this morning, $16.20. Gold is telling you a story right now, as is silver. There is a tremendous amount of fear. And it's geopolitical. Here's silver on a tear, of which we are long. Let's go to the dollar. Now, just because I'm speaking bullishly about gold and silver, remember it's 5:13 a.m. Eastern Standard Time. It's very early. A lot can happen here. This is just an indication of where we may open, not necessarily where we may close. So my tone could change dramatically by the end of business today. But at current, when I'm looking at the market that's being presented to me, I need to trade on the, I need to speak and trade on the data as it's presented to me. Now, overnight, the dollar, which I've been saying is very, very overbought, and we went over the chart on a weekly basis last night, and it's very extended. And we rolled over overnight a bit. Not dramatically. It still had a heck of a run here, but we've rolled over a bit. We found support right around the 20-period moving average, and this explains the reason why we're seeing gold surge overnight, because gold is priced in US dollars, and the rollover in the dollar is only going to help gold and silver. So ideally, we get a continuation here on the US dollar. Let's see what currencies are doing well against the dollar. Dead cat bounce on the yen. The Japanese are in recession. Euro. Dead cat bounce on the euro. Very minor. Swiss franc. Not a major component against the dollar. So it's really the yen that is showing some strength here and putting some pressure on the dollar. I question whether or not that rally in the yen is going to last. The Swiss franc is looking good. I'm going to go to equities last. Let's stick with commodities for a moment now that we've gone over currencies. Oil. Let's go with the light sweet. Where is it? Here we go. All right, oil had a good start to the week, but then it rolled over. It's catching a bid now. So what I'd be looking for here is for oil to hold this support level. And if we rally up above this resistance level, let's turn this green, then it may be game on for oil and the oil stocks. But I went over last night on the members in the circle that the weekly chart of the energy stocks, the XLE in particular, is not looking good. It appears as though it is a bear flag setup. So I'm concerned about oil. I'm concerned about the energies. I'm concerned about this entire market. But I'm worried about people getting lured into a false sense of security with the energy stocks, especially with oil up on the week, because they do trade in tandem. And people getting long of the energy stocks when it appears as though we're setting up for a bear flag setup and potential rollover on energy. Palladium, we're going to break out here in all probability. So if you're short, we already broke out. If you're short, I wouldn't be. Nice consolidation. Looks like we are going to move up higher here on, excuse me, on palladium. And what a run it has had. Weekly chart. Look at this chart. Beautiful. It's overbought, but remember, this is a commodity. It could stay overbought. This would have been a good short here. Obviously, in hindsight, I'm saying that, but I can articulate why it was a good short. We're leaning into the third standard deviation Bollinger Band, and we were also seeing RSI with, where were we here? Roughly about a 90 handle on RSI. So it was a good risk-reward play to the short side. Right now, no way. Nat gas, what a day yesterday. Hammered. Here was the nat gas inventories report. You had the knee-jerk reaction, which was very, very positive. I shouldn't say very, very positive. It was positive. Good morning, Trent. Trent, something's got to give. Everything is up. Gold, dollar, stocks, bonds. It's nuts. Yeah. Well, you know what it is, Trent? It's complacency. People forget that markets can go down. At least the stock market, anyway. But they could be subject to a rude awakening very, very soon. And that's the reason why we're short this market. So nat gas surged yesterday, and then of course you get the reversal. And this is just the death knell of a nascent rally, because remember, and I said this, nat gas was showing strength, and we even bought nat gas. We stopped out. It showed strength here last week. This is a weekly chart. And I pointed out, remember that while we may be setting up for a rally, the path of least resistance remains to the downside, because the downtrend is still very much intact. We may be contrarians, but we do not bet against the trend. Unless, of course, the trend is at obscene, overbought, or oversold levels, then we'll take the opposite position. That's our bread and butter. Just like nobody wanted gold, nobody wanted silver, nobody wanted the miners, we've been buying it for the past couple of years, or buying them for the past couple of years. Here's stiff resistance. So beware, nat gas. The trend is still to the downside. And the weather here in the Northeast is fairly warm. We're about to break to a new 4-hour bar low. Let's take a look at bonds. ripping higher here. A little bit of a pullback, but ripping higher. Yields are breaking down. If you take a look at a weekly chart of bonds, we are breaking down below a lower band of support on a weekly basis. As it looks right now in the pre-markets, it looks as though we're going to close out the week below that level, the lower band of support. This is fueling the rally in gold and silver. This is Amazon. We're short of Amazon. Looks like we're about to gap down here. Not too bad, though. Let's take a look at the equity futures market. We'll start with the Russell and work our way down. Now, the Russell is showing resilience. We are in a very tight trading range. Now, many times, and I mentioned this last night, many times when you see a top in a bull market, you'll see large caps end their rally first, and then you'll see the small caps take over because they're heavily shorted and they'll manipulate the small caps higher. So to me right now, at current, despite the fact we're seeing weakness in the markets, the small caps are being very, very resilient. And we're short. I want to say otherwise, but we can't speak our book. So we're looking for a breakout above this resistance level in green and a breakdown below in red. But at current, what we're seeing here is a higher low. Here's our tripwire. Do we break it? If we do break it, we'll probably come back down and retest support. But it appears as though the small caps want to move up higher. We are down about a third of a percentage point, but a very tight trading range here. The S&P 500 down over a third of a percentage point this morning. So here we drew last night our tripwire. I went to bed right when we broke this tripwire here in yellow. And I had expected us to be down here by this morning. We didn't. So that tells me that they're supporting this market. We are well off the lows of the session. Now, if we break support here, you're going to see computerized selling. But right now, they're holding it in this trading range. So watch for a break of 33.36 on the S&P 500. If we get that, major problem if we close down below that mark. The NASDAQ 100, your trip Qs, see how I marked this. I was waiting for an alert overnight to let me know whether or not we had broken the support level because we had closed down below this tripwire. And they're holding it in here. We're down at current about a half percentage point, but not crazy selling. So we'll remain short here, but I wouldn't go adding to my short until it appeared as though we were breaking down and prepared to close down below critical support. right here at around 95.15. And that may not happen. What else do we want to talk about here? I think that's good. Yeah, that's good. Let's go to HSBC for a moment. As a matter of fact, let's bring it up in the pre-market. All right, not much happening here. They gapped it down on the 18th. I believe this is when they announced the layoffs. Let's go to a chart of HSBC. Remember, for those just joining in, I'll say this again, and for the benefit of those who were on earlier, I'll repeat that roughly 50% of the revenues out of HSBC are derived from Asia, with 90% of their profits coming out of Asia. They recently laid off 35,000 employees. And they are the custodian of all the gold that backs the GLD, the world's second largest ETF. And that gold is stored in their London vaults. So this is a monthly chart. We are in a called a triangle formation, a descending wedge formation, whatever you want to call it, who cares? We're in a tight consolidation, or we're the apex of that consolidation. So that means we're going to see a resolution fairly soon. Either we're going to break out or we're going to break down, because there's not much room sideways any longer. And given the news coming out of Asia, the probability of a break to the downside is very good. We're still up on the month though. Weekly chart. And yes, we are looking to short HSBC. All right, so on a weekly chart, we have broken weekly support. In all probability, we are going lower here. Price target at current around 34.62. We closed out yesterday at 35.70. Daily chart. Here's your gap. I would love to see them rally this back to fill the gap. That would be a great short entry point. But I don't think it's going to happen. So members will be looking to put on a short trade here on HSBC fairly soon. But I would like to short into strength. So hopefully they bid these shares back up higher today. So more to come here. Let's take a different view, monthly view, using stock charts. I like to get different views using different charting software. Now here's the higher level. And when must you be short? Right now. What a cluster F. At current, we have broken support on this triangle formation. Stochastics are very, very weak. Volume, with a few trading days left to go, is on par at least to meet last month's volume and perhaps exceed to the downside. RSI weak. We did break out here. Do we break back down? We'll keep an eye on that. We'll keep this. Let's take a look at the weekly view. Yeah. We have some serious issues here. So they try to hold it in this trading range. It broke, then recaptured, rallied, then it broke down yet again. Big volume this week. This is institutional distribution. I would avoid these shares like the plague. To the long side anyway. And with that, folks, I want to thank you for joining in. What today is going to bring, I'm not quite sure yet. Honestly, I'd expected to see the futures a bit weaker when I woke up this morning. The small caps are looking okay. They're not as down as much as the large caps. The transports on a weekly basis are looking good as of Thursday evening. And I'll link the Thursday night members in a circle to the end of this video. So if you want to watch it, my analysis for the weekly charts as of Thursday evening, it'll be there. We also did some member stock chart requests. Had a whole bunch. We went about an hour and a half last night. It was a great time. So if you have any questions, comments, please leave them. If you haven't liked the video, if you could please do so, I'd really appreciate it. It helps me out with the YouTube algorithms. Subscribe to the channel, and everybody have a very, very profitable day and a great weekend. Be well.